Hey friends, Lucian here with the Bullish Bears team. This video is going to be about the differences between limit orders versus market orders. So I'm going to give you an explanation of both of them and then I'm going to show you a real world example. So limit orders fill at a specific predefined limit price or better. Now with limit orders, you're in control of your fill price. With market orders, they fill at the best available market price, but you aren't in control of pricing. So market orders fill right away typically. Limit orders, most of the time they'll fill, but a lot of times you might miss it depending on how quick up or down the stock moves. So you're in control of pricing with your limit orders, but you might miss your entry, whereas market orders get you in quicker, but not the best fill price. So this is where bid versus ask spread comes into play. If you're trading very tight bid ask spreads, 1-2 cent differentials, then at times you might be fine doing market orders, right? However, if you're doing low flow, highly volatile stocks that have wide bid ask spreads, then you have to be very careful using market orders. So limit orders, again, you can control, the price that you get in at. Also, another way that you can enter into trades, you can do it manually, which I'll show you. You can use how you can go into the trade tab and enter in your limit order and move it up and down. There's also more advanced platforms like DOS Trader where you can go in and edit the differential so you can have like 5-10 cent wide spread, entries. So you can use your hotkeys, and instead of just getting in, let's say at the ask price, you could have 5 cents above, 10 cents above. So it gives you a little bit of a buffer. So if stock moves kind of quicker, especially with your day trading, let's say you wanted to fill at, $2, you might have like a 5 cent differential. So if it moves up kind of quickly or down, it gives you a differential to be able to get in and out. So hotkeys are great to be able to get in and out of stocks. So if you're doing, it's kind of like this. If you're doing day trading, you want to have high speed, quick order execution. If you're doing swing trading, options trading, then it's going to be more of a slower trade. You don't necessarily need to use hotkeys for swing trading, but for day trading, hotkeys getting in and out very quickly is very important. A company like TD Ameritrade, they have basic hotkeys, but if you use like some of the more advanced platforms, you're able to kind of widen out again, your bid ask spread, the differentials on getting in and out of the trade. You can kind of buffer them and tweak your hotkeys more than you can do with a basic platform like TD Ameritrade. So let's take a look at an example here of a limit order and a market order. This is TD Ameritrade's platform. I'm not going to go into hotkeys. However, if you do want to use hotkeys, they do have hotkey set up right over here. If you click on Setup, Application Setting, and then Hotkeys, you can come over in here and come down here and edit your hotkeys right over in this Active Trader area. So what I want to show you up here, again, you can use big buttons feature, so you can get in and out of a trade through big buttons. You'll see I have buttons over here: buy a market, sell market, buy the ask, sell the bid. Buy the ask is basically buying the ask price, selling the bid is selling the bid price. These are actually very good and useful tools if you're using TD Ameritrade to get in and out of a trade. They're like a hotkey, so instead of using a hotkey, you can just hit these buttons. You can just click the auto send. So if you wanted to get in and out of a trade quickly, you have auto send on. You could buy the ask, sell the bid, buy market, sell market. So these are for big button features. But if you wanted to go in and just kind of look at the order entry system, if you come over here to trade, again, a lot of the platforms are going to be very similar. So you can just see right up here, just kind of showing you the process. If you right clicked over here and you'll see buy, when you see buy down here, you'll see the order entry tab over here and you'll see limit, right? So this I can move up or down based upon where I want to get my entry. So if price is at 116.11 now, let's say I wanted to enter in at 116.05, I can press an order, to buy at 116.05. If price doesn't fall down to 16.05 and fill, then I could miss my entry, right? Or that I would miss my entry. Or again, sell price if I want to sell, let's say I got in at 116.05 and then I wanted to sell at 116.50, I can put in an order, say right click, sell, and I can do an order to sell at 116.50. So I can go up, up and down here, right here. Now I don't have the position, but let's say I had it, it'd be 116.50. Now I could be shorting here, just give you a quick lesson in shorting. Right now, if I was to go short on, Apple, this would be in order to sell 1,000 shares at 116.50. So that's an area that's how you would go short. We have videos that teach how to do shorting. But if I had my position and I wanted to sell, let's say I got at 116.05 and I wanted to sell when price gets to 116.50, I can put an order in right here to sell at 116.50. If price goes up to the 116.50 area, then it'll fill. But if it goes to 116.45 or 40, then my order wouldn't fill. So that's how I'm controlling how I get in and out of the trade with a limit order. If I want to do a market order, I would just do buy and change this from limit right here to market. And the moment I press this in, it's going to fill at the best price. Again, if it's a very highly liquid stock like an Apple, it's fine. You can use a market order if you have those 1-2 cent spread differentials. But if you're trading those low float stocks with wide bid ask spreads, then you have to be very careful because you can get a bad fill price. That's on entries as well as your exits. So again, very important. Look for those tight bid ask spreads. Unless you're trading low floaters, it's not always bad to have a wider bid ask spread, but you have to understand how to trade those. And that's a whole other strategy with trading penny stocks. But again, limit orders are the safest way to get in and out of a trade.